Hey, this is Jack from Alphacharts with a weekend video for subscribers. Today is June 16th, 2024. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, thank you all for being subscribers. I really do appreciate you. This video is just for you. And happy Father's Day to all the dads out there. You guys do a great job being dads. It's not an easy job, I understand. So happy this is your day. Happy Father's Day. What do we got going on? We got earnings this week. Not much. We have Kroger. I guess that's something. Darden restaurants. They may tell us something about the consumer. But overall, nothing really that I'm worried about here on earnings. Market, looking at the calendar, not much going on here as well. We have a bunch of Fed governors speaking. We have no market trading on Wednesday for a national holiday, Juneteenth, national holiday. And then Thursday and Friday, housing starts. Again, nothing really for the week. So that brings us back to the charts. By the way, this is my second time I'm making this video. My internet went out 3/4 of the way. And so I kind of have already done most of this one time. Dry run, I guess. So let's do this one more time. This video is broken down to 4 parts. We have state of the market. We're going to go through the internals. That's part 2. I have an ETF list I want to go through. And then my final list. Watch list. And again, looking for the best of the best. It's I added some stuff. I took some stuff off. I think there's just under 40 names or so on there today. Okay, so let's get into what I want to say. We're going to go to weekly charts. I think that's a great way to see it. So on the weekly chart, you can see that we had this big base. Again, whether we choose here or here, this would go up about 10 points. So maybe it needs to be 10 points higher. That remains to be seen. But we're getting to a point where we may see some consolidation. That's neither here nor there, because my point right now, I should say, is that it's a pretty strong uptrend, right? And even if we see some consolidation, some pullback, maybe to 526-ish or so, what do I know, 526, 525, that is still a pretty strong uptrend going on here. Again, we're in a weekly chart. Now, when we look at the RSP, it doesn't look the same. It looks very, very different. I think that talks to what we're seeing in the market. It's a lot of haves and have-nots and very concentrated on what is working. And that is my focus for this video, is what is working. So let's just look at the SPY. I pulled up the ETF list here, and you can see what's in there. It's the mega caps: Microsoft, Nvidia, Apple, Amazon, Meta, Google, Broadcom, right? That's what's working. So let's go back here. And again, you can, big difference between SPY and RSP. So let's look at the Qs. Great week, 3.5%. It's working. Room to the upside, right? It's working. Equal AQs. It's basing nice, only at 0.9 for the week, which is fine. But it does look very different than this, right? This broke out back in beginning of the year. Equal AQs, again, did have a nice little move, but really hasn't broken out yet. So it's concentrated. And now let's look at that concentration. Same ones: Apple, Microsoft, Nvidia, Broadcom, Amazon, Facebook, Meta, Google, right? Do they both have Costco in there? Yeah. Anyway, so my point here is, but Costco is in S&P, just not a higher weighting. My point here is, look at the concentration here. 50% are these holdings. 50%, right? Crazy. But the good thing is that you're able to see why Qs are looking great and the equal weight Qs are looking just okay, setting up still. And the reason is the concentration. This is what's working. So we're going to go into that a little bit deeper later. I added all those names, obviously, to our list because they should be there, right? Doesn't matter their market cap. If it's working, it's working. Look at the mid caps. Again, that's 2 billion to 100 billion is usually what is considered a mid cap. Not really working. They're just not. They were for a while, right? That's a great move. But then it's kind of sputtered out. Now, if this kind of starts higher again, hey, that's a broadening of the market. And if they start working, wonderful. Everything's working at that point, right? IWM, just a brutal, brutal sideways movement. If this is one big base, which hopefully it is, um, when this eventually does break out and move higher and get to all-time highs again, because it will eventually, um, it's going to be huge. But right now we don't have that. That's not what I'm looking at the next few weeks, and right now that's not what I'm seeing right now. Right? We have the ETFs, XLF, try to break out, couldn't, kind of coming back in. I like this on the daily chart better because you see the 50-day moving average very clearly and with price below it. SMH looks great. Again, 25% is NVIDIA, and then Taiwan Semi's in there and Broadcom. So those are all heavy weightings in this one, and that's why you're seeing this really rip higher. When you look at the equal weight, it tried to break out. It's come back and retested. There's your breakout right there. Retested. Still a nice uptrend, but doesn't look like SMH, right? The big boys are leading the market. There's no doubt in my mind. Obviously, it's not my mind. It's the charts that are telling us this. Again, looks fine. Semis are doing good overall, but SMH is leading. Transports, big spot right down here. I think 62's got a hold. You saw buyers did show up, which I think is good. We're not out of the woods yet. I think transports breaking down is a really big negative on the market. Will put pressure on the market. If we can create some sort of bottom in this range, eventually break this downtrend line, and then have these moving averages start to move higher again, I think we're in great shape. We haven't seen that yet. So again, talk about things that make me a little bit more worried, nervous. Yeah, as IYT, right? XTN, more of an equal weighted transport index. Again, not looking good, but the buyers did show up. So we have one day buyers showed up. Let's see if we can make a trend out of that, right? We'll keep watching. ITB housing doesn't look as bad as transports, but still doesn't look great. Under the 50-day, they're all moving lower. Did hold around the 101 level, but we'll see if that could continue. And then you have XHB, similar enough look to it. Really, SMH for me has to lead, and it is. The other ones I'd like to see participate. They don't have to lead, they have to participate. I don't think we have that yet. So that is again, that on the back of my mind, that's a little bit worrisome. Is it something that's going to change what I'm doing? That's not enough yet. Now we could look at the internals and see if something matches up with the internals and can change our minds. But as of right now, we have SMH leading, we have mega caps leading. That's not that abnormal, right? All right. So let's go to some internal work. So I want to talk about, I have a lot of questions about the SPY trend chart that I've been sharing. And so first off, it's a completely discretionary chart, meaning I put the arrows in based on what I think. Now, what I think comes from obviously the charts we just saw, the internals, the market, what's leading the market, and what's not working in the market, right? And everything is completely discretionary. It's a sum of all the facts that I can find, and based on my experience, what it means, right? So we have green, which means bullish, yellow, which means cautious, and red means bearish, outright bearish. And again, the green means go long. You'd probably be leveraged long if you wanted to. Yellow means get off of leverage. Tighten up some stops, maybe take some cash, take some profits if you got them, and raise some cash. That's what yellow means. Doesn't mean sell everything. It just means get cautious. And then you have the red, and the red means, hey, things have really changed, I think, and be careful, be real careful, raise stops and hold higher levels of cash and definitely no margin, right? That's where I trade this stuff. And you see sometimes, you get a little cautious and then it goes back green. You get a little cautious and it goes back green. That happens, right? We were green here, we got a little cautious, then you had another whole leg up. Right, great. That's going to happen. And sometimes, you get that tumbles, because the market sometimes gives you mixed signals. That happens. So what does green mean? Let's talk about that because that's what we're in right now for me. Um, it means that you could go long, you could be leveraged long if you want to. How you leverage is up to you. If you want to leverage, right? I don't use leverage in the traditional sense, but I will use a 3x ETF or inverse ETF. That's my preferred method of doing it. I don't play options. That's not just, I never had real luck with options. I don't like the time decay. So I know inverse ETFs are based on options, or 3x ETFs are based on options. And they do have a decay involved in them. But in a bullish, if you're in the direction of the movement, I don't worry about that decay really. It's when it's sideways movement or you're in the wrong way, right? Okay, so that's what this chart means. Again, completely discretionary based on what I want. Green means go long an ETF, or if you want leverage, you could. And I'll be honest, I've actually done better with this directional plays, in the last month or so. Definitely since we turned green here, than I have with my individual names. And mostly because we've seen that rotation under the surface, which has been really hard to get traction. So this is at least is directionally long, and you're taking advantage of the strongest names right off the bat. So there you go. So that's how I'm playing this. And again, I'm using TQQQ as my vehicle right now. Again, we shared that earlier. We'll go over it in a little bit again when I go over the ETFs. Um, and it's doing well. I can't complain, right? It's doing well. All right, let's go into these internals. We got the VIX. VIX, it's in a bullish range. Again, will we get some spikes occasionally? Absolutely. But overall, looks really, really good as we came down from, these extreme levels in 2022. Everything looks great. So again, I'm not too worried about the VIX. Nothing much to see there. Credit spreads, you get a little blip that is coming up right here. Again, we've seen blips like this in the past, so I'm not going to get overly worried about it yet. Pull that way, and we'll see if it can get above 1.52, right? That would be a problem potentially. But until right now, we're just in a kind of a bullish range, and I'm not too worried. Is that we've seen these in the past, and they've all been shut down. We'll see if this continues. We're gonna watch it. But I'm not too worried about it again yet. Breath, MMFI, which is the percent of stocks above the 50-day moving average, and it obviously is moving lower. We saw that already. We knew this was going to happen. When we look at RSP compared to the SPY and equal weighted Qs to the cap weighted Qs, right? Of course, this is going down. But there are winners still out there, right? Even with this. So we have a SPY that's rising as breath is deteriorating under the surface. Does that mean the whole thing has to fall apart? It doesn't. We could see breath kind of, come down even a little bit more and then start to increase again. And now it pushes everything, much higher. Don't know if that's what's going to happen, but that is a very likely possibility. Meaning, yes, it's important to know that breath is declining, but that all basically tells us make sure we're in the right areas of the market. Okay. But yeah, we'd love to see if we get a washout of breath and markets are holding up pretty well. That would be that'd be pretty awesome actually, because from a very low breath area, we would get expansion, and that would be something to see, I think. What else do we have? Let us look at put call ratio. I do that. Thanks. Here's the put call ratio. No real market extreme right there, so I'm not much of a signal at all. And let's look at the dollar. The dollar is more interesting to me. I think this is a driver of the market, at least it has been in the recent months and in the last few years. And this 105.50, it's a big spot, right? If we close above it, it's going to put pressure. If we fill this white space, it's going to put pressure on the market. Conversely, if this can roll over and get into this white space, we're going to get a much more accommodative market, much easier to trade. So I think that is really the two spots. Obviously, if this area breaks 107 and we go up higher, even all the way to 120, that would be a big, 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 big problem for the market, right? That would be very bad. We're not even close to that yet. I just would like to see 150-ish. I'm sorry, 105.50 hold this general area and this to roll over. That's the bullish thing. Again, we fill up this white space and try to get to 107. That's going to put a lot of pressure on equities. And then the 10-year yield moving lower. That's not as strong. I don't believe that's the dollar. So the 10-year yield needs to continue going down. It's helpful. But the dollar is what I'm watching. All right, so there's the internals. So let's just take it right back. There was nothing that wants me to change the signal. I still think we're bullish. I think that if we start to break some of these moving averages, if we retest 530-ish or so, 531, 532, basically the 23-day. We start testing it and it starts to break. That's a problem. That's 2% lower. The 23-day. That's really not much at all. So we could come back and easily retest that. As long as it holds, we're good. I think we're in a bullish time in the market. I do. There's winners and losers. Let's talk about the winners and losers. We're going to go into the ETFs now. I'm going to go to the dashboard here. DV's got this really neat dashboard. I loaded my personal ETF list in here. There's about 120 different ETFs in there. And I'm looking for winners and losers. This is over percent change over the past 10 days. They have a lot of different options here, but this is what I like. Tells us my recent, who's really outperforming the last 2 weeks or so. And you see it's semis, it's technology, blockchain, IGM, which is expanded tech. Again, and you see all the different areas that have done very, very well over the last 10 days, right? Now, what hasn't done well? What do we need to avoid? At this point, we need to avoid cannabis and materials, metals, minings, European banks, silver miners, oil, right? Uranium is in there, copper's in there, steel's in there, right? Junior gold miners, shipping, lithium, right? That's what we want to avoid. Again, you see these, how bad they've done over the last 2 weeks or so. So let's look at the best looking areas of the market. Go back to deep view. So we saw IGV. IGV was on that list, and we have a beautiful, cup and handle-esque look, base look. Hasn't broken the trend line yet, but it's an ETF. If you want to trade, some people just trade ETFs, and that's absolutely fine. This you have this bunched up moving averages. As long as price stays above them, I think you'd be long the name, right? You could even, depending on your time frame, some people may use a 200-day. I don't. But I think as long as it's above the 50-day, that looks absolutely fine. And this is the IGV expanded tech, and it has, the good and the bad in it, right? So that's the one thing about ETFs. You're getting Microsoft, and you're going to get, CrowdStrike in there, but you also have to take things like Salesforce, right? Which looks terrible, right? So yeah, Microsoft looks great, but Salesforce, and so you're going to get both of them. So that's the only issue with buying the ETFs. So you have to be in the best, again, best of the best. So IGV is one option. Another option is BLOK. This is the blockchain ETF. Again, trying to make this big bottom. It hasn't quite broken out yet, but overall starting to look good. It's got a lot of NVIDIA in there. Has Taiwan Semi, NVIDIA, Coinbase, obviously, Robinhood, and so on and so forth. Again, you're taking the good with the bad. But overall, it looks pretty good. Look, nice little base, right? It's a nice base. What else? Hack. This is probably one of my favorite one. because you have, again, cup and handle look, right? They all look very similar to the ones that I showed you. This one's trying to get back to all-time highs. That one's a little bit that, which is nice. It already kind of broke out of the trend line. That's kind of nice. Even if you move the trend line to here, whatever, it broke out. You still have the bunching of the moving averages, so you have a nice place. We'll call it, maybe 61-ish or so. You go put your stop. It's $2 risk. The buy. What is the buy? The buy doesn't really matter so much because it's only a $2 risk, right? So, $2 is, 2.5%, something like that. So that's great, right? And then you get to be in one of the best areas of the market. That, again, not everything is going to go up, but it's heavy crowd strike and let's see what the heck is it actually. Let's look, you have semiconductors in there, obviously some defensive names, and then of course you have Palo Alto and CrowdStrike is 7% and so on and so forth. So again, you'll have winners and losers, right? For every CrowdStrike you get, you're going to get a Sentinel one as well, right? Which looks terrible. So, but that's what you get with an ETF. You get the safety of an ETF, that you have broad exposure to a whole sector. And there's nothing wrong with this one. It looks great, actually. I think it may actually make our focus list. So there's that. All right. So what have we been in? Well, TQQQ is a triple leveraged NASDAQ ETF. This was the note from 6.6. I think it makes it back to all-time highs potentially. I'm already in this one. Yet moving higher. We liked it from 6.6. So here's 6.5. 6.6 was right in that general area. And it's done very, very well for us, right? On the week it was up 10% on the week, right? Strong name. Another one could be TECL. This is a technology bull ETF, 3X again. There's your breakout right there. On the week it's up 17%. So again, super, super strong. Probably needs a little pullback for this to be used tactically. I'd like to see this kind of get back to, mid 90s or so, and then it could maybe break out some, maybe a 4 or 5% pullback, triple leverage. That's not too much. And then, yeah, but overall, breaking out looks really, really good. So love that name. So those are two names that we could potentially consider. I'm in, the Qs already, and TECL is another one that I'm considering at the right spots. And so that's what's working. So what I did now was I went ahead and looked in all of those ETFs and try to pick out the best of the best. And not surprisingly, the best of the best was what we see in here, right? These were the best of the best, right? But we're going to go over them. And again, I updated the list. I'm always updating it. And you're going to see more and more concentration into things technology related, and just larger names, semiconductors and so on and so forth. Okay. Apple. This is a name that I'm in still. I did sell a little piece of it in here, but it's making a flag. It's doing literally nothing wrong. I just decided to take a little bit off, and again, it just has this little flag going, and again, may need a little more time, but overall, it's market leader, all-time highs. Everything looks great, and it's doing very, very well. Applied Material. Love this name. Oh my gosh, look at this. Just that little area. Look how that's holding up so nice. A break here, and it's going much higher. The hard part with this one, again, we've talked about this one multiple times, is that you're kind of extended already from the 23. Not terribly extended, but a little bit extended, right? We'll love to see a tag of this 9-day, and that would be interesting. AMD, I think it's not worth looking at right now. Amazon, again, I do have my position still. It's holding on by a thread at this point. but I'd like to see this break out. If this breaks out, again, here's the note back on 6-9 about a week ago. If this can break out, this is a huge base, and this would go right along with mega caps doing really, really well. It's consumer discretionary, right? So, but they do so much more than that. But love this. If it can, again, just kind of turn the corner here, get above 188, that'd be great, right? Not quite there yet. Aspen aerogels, again, a little choppy in here. I still have my position in this one. But it's really gone sideways, hasn't done anything at all. And raising stop, right? My original stop was at 28. My new stop is at 28.50, right? So even though I'm a little underwater on this by a percent or two, now my risk is I'm de-risking on the bottom side as well, right? And that's that. So now instead of having a 6.5% risk, I have maybe a 4.5% risk, right? In its total. So again, de-risking. ASTS is a mobile, I think, cell phone provider. But they do it from satellites like SpaceX. So they're a SpaceX competitor. Good chance it could get back up to this 13. That'd be very nice. Again, not my cup of tea, but y'all may like this one. Again, very strong name to it. So I wouldn't be shocked if it gets to this 13 level again. Broadcom, big split coming up. I think it was 10-1, but again, very, very strong name. KMT, again, another semiconductor name, just in trend, doing great. Kava, trying to consolidate here. Moving averages are catching up. Again, strong trend. Nothing wrong with this. We've talked about this one since the original breakout back in here. You see, we added more here. Lots of stuff going on there. Right, added right in there. And very, very, again, strong trend coming up here. $85 is where my stop, would be. CLBBT, Celebrate, we've talked about this one in the past, and it hasn't really panned out for us. So let's wait for the true breakout here, right? It's got to prove itself at this point, but it's got a cup and handle look to it, right? We liked it back in here, kind of got faked out right there, but came right back. So we'll see. We'll see what happens. Coinbase. Again, this is the leader in crypto. You want to be in crypto, Coinbase for me is the way to play it. Unless you want to buy, the Bitcoin ETF. But again, Coinbase is a little bit more broader, and again, exposure is a little bit different. This was from 520. So I don't know if somebody's still in this or not. I am no longer in this particular trade. Again, we have flattening of this 50-day, and we'll see if it can move higher. But again, it's a crypto play. ARM, we've talked about this one for a while too. Too erratic for me. I'd rather be in a better name. I mean, not that it's a bad name, but it's just too erratic. I don't like the way it trades. CrowdStrike was looking pretty rough, right? Pre-earnings, and then earnings hit, and man, it took off 12%, 2 days consolidation, and popped again, another 7%. Now we're consolidating. So yeah, it looks absolutely fantastic. Let's just put a VWAP in there. I can get it right. There we go. There's your VWAP. So well above VWAP. I wouldn't mind if it came back and tested 362 to 365. That would be absolutely fine with me. But overall, the CrowdStrike looks good. This is floor. And kind of double bottom-esque. Broke out, and now it's kind of moving sideways. First Solar was really, really, really hot. Again, why wouldn't it be? Giant moves, consolidation, nice secondary moves, and now it came back in, which is fine. I'm not ready to jump on this one yet because solar in general isn't really outperforming. So I want to wait until I can see this firm up, see where buyers are going to step up again, support it, and then I could potentially get involved. This 260-ish area, 262, something like 263. That's an area that I'd like to see supported. All right, Google. Yeah, straight up, Google looks great, right? Nice thing about this is that if you use 175 as your stop or something around there, you have very, very, very little risk involved in this name, right? 2% risk. That's one nice thing, very liquid name. You could go to the 50-day if you wanted to, and probably still have very little risk, 5% risk if you go to the 50-day, which it hasn't touched in a long time. HIMS, I think right here, if you're in it, this is an area to sell into, at least a partial. We've talked about this one multiple times in the past. You always buy back if it breaks out, but for me, this would be a sell into this prior high right here. Robinhood, again, looks good, pulling back a little bit. Not doing anything wrong, right? Not doing anything wrong, just in trend. Irene is funny. We talked about this one last week. I think I put on there. Maybe I don't know if it was 2 weeks ago. Um, and as it was making the space and potentially breaking out, and then I see it broke out on some giant moves when the market really wasn't doing great, and everyone's all over this name. It's one that we've been on for a couple of weeks now. Is it one I'm in? No, I never bought it. But again, it's doing amazing. Look at that. Somebody bought big stakes in that. Shark Ninja shook me out, and now it's going higher. That's the way it goes. But looks really, really good. And the risk here is, reasonable. Very, very reasonable. Lifetime Holding Group, they do stuff with boomers, right? Um, Brand offerings, fitness, experiences at communities, so on and so forth. You see this kind of base breakout. Maybe it wants to move higher. It's a way to play the boomer wave and then going, I guess, into assisted living. I don't know. But again, looks like there's could be room to 22. That one. Some more mega caps. Here's Meta. I mean, as long as this holds, this 485 level, $20 risk for $500 stock, that's pretty good, about 4%. Again, I like Google better, but it's doing really well, right? Can't really complain. Here's Microsoft, looks great, right? How good does Microsoft look? When's their stock split? There we go. So yeah, just consolidating all-time highs. Micron looks great, semiconductor name coming out of the cup and handle. We talked about this one really since May. And got in it again at 6.6. This was a buy or add-on buy. New. I don't like how choppy this is, but I'm going to keep watching it because it hasn't done anything wrong. It's just kind of gone sideways, but don't love the choppiness. Nvidia, obviously, it continues higher and looks great. Everyone thought this after the split it would be a sell the event type of thing, and it just wasn't. It continues higher. Novo Nordisk continues higher, looks great. On clouds came back in some, getting a little bit loose in here. So we'll just keep raising our stops and try to take profits when we have them. Oracle, this is a newer name. Again, old tech, but had a nice big pop, 13%, and into all-time highs. And then little flag it's making right here. So that is nice to see. Palo Alto, obviously I did a lot of work in the hack ETF, and this was really a pretty good looking name. You could kind of draw I think if it can break above, 325-ish, it looks good, right? Above 325. Maybe it needs a couple more days to consolidate, a little kind of inverse head and shoulder type action, and then it breaks out. Here's Palantir. Again, I have a position. There's your VWAP from here, and price is right there. So we had a break of the trend line, and yeah, I mean, it looks good. These were some of our notes, right? Um, got in slightly lower risk, which I liked. And it's holding up. 2250 is my new stop, right? 2250. If you want to be a little bit more forgiving, you do 22. Your choice. That was the original stop. Sweet green, I don't love this kind of wobbly in there. SMCI, it's another one that's looking pretty good. Let's go ahead and get this bigger. And if it can break the trend line, you know what? We're gonna get these moving averages starting to look good again. We had a nice pop on volume with 12.5% right there. A little consolidation. You can make the argument that if you get above, what's the high there? 872, right? And you could use 840-ish or so as your stop. That's where the 50-day is. You don't want to do that. You can use 821. Again, that's kind of let's see what that is as far as roughly. Yeah, 6% or so. Again, it's not really for me at this point, but it's a trade. And it looks good if you're in it. That's what I'd want to see happen. TMDX, again, you're seeing these top wicks. Don't love those top wicks, but it's holding up really, really well, and things are moving higher. If it can get above, this general area, right? That would be interesting, right? Little base that's making up here, right? Breakout would be good. Taiwan semi, I mean, why mess with it, right? Looks great. There's your little flag it's making again. Just a little consolidation. Of course, it's extended, but it looks really good. And maybe if the 9-day can catch back up, that could be another entry. May close this gap, no big deal. May have already basically. It all looks good. Actually, it didn't. 168-ish or so. That'd be a good spot. Uber, I mean, we liked it. It's a big component of IYT, the transports. It looks really, really good. As long as it can stay above these moving averages, right? I want to see above, really $68. We'd love to see it hold the 50-day and not to start to, turn flattish to rise. Last one is Western Digital. Again, really good look to it. The trade was by 77.25. So you may be in this trade already. Very low risk. There's even less risk now. It's 75.50. So I may put this again on the focus list because it is, when we look at it, it just retested the breakout and it's right there. So it looks really good. So WDC probably going to be on the focus list. And mostly because the reward to risk is just great in this, right? I mean, as long as it's above 75.50, you could be long the name. Was that 3%? Not even. Yeah, roughly 3%. So it looks great. Anyway, so that's the last one on the list. Back to Apple. So you see really high concentration in technology and mega caps, and a few other things sprinkled in there that are working. I think we have to be very, very selective in what we're doing. I think it's a bullish time in the market, but we have to be selective. Not everything is working. Mostly the big caps, big cap technology. That's what is really working. We may see some more weakening of breath before we see it come back. Maybe another week or so. What's kind of nice in the let's go here. What am I looking at? I'm looking at equal weighted Qs, was it? When we go back 50 days, which is right here, right? Right here, that's 50 days. So as we come into this week and this data, 1, 2, 3, 4, 5, right? Up to here, right? And then this 50-day will really start to rise as long as price can stay above there. And that's interesting, right? You have this little inverse head and shoulders right there. So it looks like we may need another week or two of consolidation, maybe a little pullback, but then things could be really setting up. So we're staying bullish, staying in the right places in the market to make some money. Consider ETFs. There's nothing wrong with them, especially if we're in a bullish trending area. And that's what that is. That's what I got for you today. So thank you all very much for watching. Hope you all are doing well. Happy Father's Day, and take care.